Hi, everyone, and welcome to this episode of the Ncast, a podcast from Ncontracts, the leader in enterprise risk and compliance management solutions. My name is Guy Weissmanel, and I get to lead the marketing team here at Ncontracts. I'm really excited to get you all into this week's episode. You know, this October, we're celebrating National Cybersecurity Month, and so it felt right to lead off the pod with a conversation with an expert on the issue. And we're really excited to welcome Paul Benda to the podcast. Paul's a Senior Vice President for Risk and Cybersecurity for the ABA, the American Bankers Association. And we really couldn't have asked for someone better to talk about issues ranging from exams and how we do them remotely, phishing, cyber attacks in a work from home environment, and a bunch of stuff in between. Our own Paul Viancort had the chance to speak with Paul, and we hope you really enjoy it. So take it away, Paul and Paul.
Hello, everybody, and welcome to today's podcast. I'm excited to be joined by ABA's Paul Benda, who is also going to be my co-presenter of a webinar next week entitled Cyber Risk Management in 2020, What You Need to Know. Obviously, it's been a very busy year for cyber risk issues, and we're happy to have Paul Benda on the webcast today to talk all about it with us. So how you doing, Paul?
I'm well, Paul. How are you?
I am great, all things considered. Wanted to talk a few things about, the shifting to remote, whether it's exams or work from home or some other things. Obviously, the pandemic really pushed us to digital channels, maybe in a little bit of faster velocity than our controls were capable of in some instances. And I think we've done a good job of that overall. But, I think there are really some issues that I'd kind of like to get your input on. And the first one is that comes to mind is remote exams. We know the regulators very swiftly went to remote exams, but I'm kind of wanted to get your feedback on, the adjustment to them. How do we think banks are adjusting to those generally?
So, everything we've heard from banks is that they appreciate the flexibility and the accommodations the regulators made. A lot of banks close their doors, appointment-only lobbies, other things, and the regulators, like you said, move swiftly to those virtual exams. So, I think everything we've heard is actually banks really like it. They like the fact that they get the questions in advance. They can be better prepared. They can provide the information, in basically one package to the examiners. They kind of have a roadmap of what's going to be asked, what's going to be gone through. And so they feel like it's, from their perspective, it's a very positive experience. Interestingly enough, though, we have had some banks say, I kind of missed that one-on-one interaction with the examiners. It seems like, it may not be as in-depth as it was. This is from the bankers, not necessarily from the examiners. So I think people do want to go back to that on-site. But everything that we have heard is that the examiners are really looking at maintaining the remote exams basically through the end of the year. Some different regulators might be different. OCC might be a little more aggressive than, say, the FDIC or others. And a lot of it might depend on the local examiners and local conditions. If you have a high incidence, it might be all remote. If things are getting better in the area, they might move towards in person. So, track your local characteristics. And, the best thing is always just ask your examiner what their plan is and tell them what you would like their plan to be. They want to hear from you on what's the best way to move forward.
Yeah, that's an interesting point that, you as a banker have input and you should make your voice heard, right? So if you are in a COVID hotspot or you're having some type of, COVID impacts on your business, whether it's staff or otherwise, I think it's good that we make our voice heard in the beginning of the exam. So on that note, I'm a certified internal auditor, and one of the things, from one of their kind of basic tenets is, how do we do those exams with the minimal amount of business disruption? So are you hearing anything regarding whether these exams are kind of more or less disruptive than the in-person ones, or have you heard anything regarding that?
Yeah, it goes back to they really like having that roadmap, those questions ahead of time, building that package. I have not heard a banker that hasn't said, these are easier to go through, less disruptive. Some would say examiner come and spend all day or 2 days and might go down different tracks. They never knew where they're going to go. Staff was always on their toes. Now it's basically, they can actually move through it much more quickly. They've got all the materials that they know is going to be looked at ahead of time. They have a very comprehensive package. And so I think, in general, people have been really pleased with it. And it's been, easier to handle. And when I say easier, I mean less disruptive for the bankers than, not necessarily knowing what might be looked at, what might not.
Yeah, that's actually that's great news, because I, in my career in banking, ranging from banks of any size, that business risk disruption is rather significant. So, any way that we as bankers can benefit from having kind of a less disruptive audit process or exam process is great. One final question I did have regarding exams is, obviously COVID changed a lot of our priorities as individuals, as a nation, as bankers. Have you heard anything regarding examiner priorities in this post-COVID world? I'm not talking specifically about, Main Street lending and triple P loans, but, any other areas where they may have placed a little bit of regulatory emphasis or exam emphasis because of COVID?
Well, I think there is some concern about the remote work environment. And so depending on how a bank has, been working the past few months, that is one thing we do believe the examiners are looking at. How have you implemented your information security processes for those workers that work at home? What kind of controls do you have in place? How are you auditing those controls? How are you ensuring that sensitive information isn't shared? What's a home office look like? How does your staff make sure that that information doesn't leak? Do you bring your own device? What are the IT controls that are in place for that, and how are you tracking that amongst your staff? So I think exams are exams, but I think there is a little bit more of an emphasis on that. I think there's going to be an emphasis on resilience, business continuity procedures. We've kind of gone through one massive business continuity exercise, but how does that look as we go forward in terms of the long term? And as we move to the cloud, what does that look like? And how is that information security aspect being done in place for you in the cloud, especially for those banks that might rely on Office 365 or others? How are you tracking those IT security controls, and have you implemented the best practices?
Yeah, those are great comments. Obviously, I think work from home is a huge issue that we want to explore a little bit deeper on this podcast, but also a little bit of foreshadowing, right, of some of the things that we're going to talk about next week. There's a lot of concerns there, and again, we were kind of forced into work from home, and so how did our plan outstrip our internal controls, and in what ways might we want to bolster that? That's really good, thought that we can have for how we're going to talk about things next week with our folks. But let's as we get into this, you mentioned some data concerns, and I think that's a really great segue into the next topic here. Let's talk about some data breach issues, right? So the hackers were well aware that COVID creates some opportunity in the industry, right? So for their industry, we should say. And so, of course, seeking out that opportunity, we've seen an increase in data breach attempts. So what have you seen on the trends, or any other maybe controls that we've seen by the banks to kind of prevent the data breach occurrences?
So, we have seen a lot of phishing attempts go up. Some of the numbers are 3, 4, 500% over the last 6, 7 months in terms of phishing attempts. A lot of them centered around COVID. They still focus on the business email compromise. I do think that the fraudsters a lot of times go for the soft targets, not necessarily maybe targeting banks. I think there are some that might do spear phishing, trying to target banks, but certainly targeting customers. We know business email compromise is still out there and still being done, and fraudulent transactions occur. We know that phishing is going out there. One of the big trends that we've seen, and I've talked with many people who have gotten it, where people are posing as customer service agents, whether it's for Facebook or Amazon or others, and then they'll actually try and get people to download apps onto their phone, and then they'll use that app to take over the phone and either transfer money out or gather credentials. And so that's one that's been a little bit more sophisticated in terms of going forward. Again, not necessarily targeted on the banks themselves, but customers. But you could easily see how they could potentially do credential harvesting against bank employees, which could cause you very significant issues.
Yeah, and I think that the phishing implications are really both for the bankers and the customers alike, right? So we've obviously the work from home, with the work from home, we've seen phishing go up for the bankers, but for the customers, typically in the fraud area, we see that phishing, kind of crescendo when it comes to like large scale government programs. So every year at tax time, right, we see that phishing increase, and then also with the government stimulus, I think that really peaked things. And I think if we see a second round of stimulus, especially if it's direct payment to taxpayers, we're probably going to see that again. So do you have any advice for the
You're
consumer?
absolutely right on.
Go ahead.
So one thing for the consumer is, ABA has partnered with over 1,600 banks on a Banks Never Ask That campaign. So the idea really is we worked with a production company that was a little zany, trying to, cybersecurity. I find it very exciting. Many people don't. And so the idea is, what do banks ask and what don't they ask? Does a bank ask you, do you wear boxers or briefs? Do you believe in aliens? No, of course not. And does a bank ask you for that one-time security code? No, we'll never ask you for that. And so we partnered with this production company. They've got several videos out there that are, hopefully eye-catching and humorous. There's one about a butter hot tub. So, we want people to go to banksneveraskthat.com. It's running all through the month of October, which is National Cybersecurity Month. And during that month, you actually can fill out a quiz to test your acumen. There are 6 questions there on how good are you at spotting potential phishing attempts. And you can even apply to be in our sweepstakes and potentially win $1,000. So we think it's a fun way to try and educate consumers. We're really pleased with the uptake on banks. Like I said, 1,600 banks participating in it, spreading that material. My personal bank actually sent me an email that referred to it, so that was pretty exciting. So we think it's a fun thing. Hopefully it'll sink in, and the big message that we're trying, we need to educate our customers on this. They really are the ones that are that gateway door in there. And trying to get them just to, hang up if they have any concerns about who's talking to them, or if anyone tries to pressure them, and call the number on the back of your bank card or go to the website that was bookmarked in your browser. Never use, those contact points that they might give you, because you have no idea who you're talking to if they reach out to you versus you calling them.
Yeah, that is, Paul, that's great. And that's an excellent resource. And hopefully consumers will take full advantage of that. I think really by and large, what we're trying to do is kind of extend the training that we know that we do with our bankers, especially that phishing awareness training, right? It's kind of extend that into our customer base. We know it's a really good, effective risk mitigant for our folks. So we'd hopefully that will extend to the consumer base. So I think that's a really great effort. So applause to the ABA for that. Really quick last question on work from home. The risk manager in me, looks at, okay, we've gone to digital channels, we've gone to work from home, we've put these controls in place, but what I like to think about is are these controls temporary or permanent? And so, and I think that really goes to the effectiveness of the controls long term. So I think my question for you, if you look into your crystal ball, is, number one, do you think work from home is the new normal? And then number two, if that's the case, what are we going to do about how to take our control environment from short term and turn those into long term controls?
Yeah, those are great questions, Paul. I think work from home to some extent is going to be the new normal. I think it's interesting. For my organization's 100% virtual. We're lucky we don't have a retail environment like banks have, and it works really well when you're 100% virtual and everyone's on Zoom, for example. When you get that hybrid environment, when you have people in the office and you have people out of the office, how are you going to handle that? Are you going to have Zoom, a laptop in front of everyone in a conference room, so that those that are outside the conference room can then participate via the Zoom and everyone's face to face like before? And those controls are that same question is as we relax some controls potentially for that work from home environment. We know some people in terms of use of VPN, they have to turn their VPN off when they do video teleconferencing. Are we going to upgrade our systems so that we can handle that kind of thing? Are we going to upgrade people's home internet to handle that kind of thing? So I think there frankly are a lot of unanswered questions on how we're going to move forward. I do know, for example, we work closely with NACHA in terms of unemployment insurance fraud and other things, which requires us to return partial funds of cash to states and things like that. NACHA's coming out, they did a lot of temporary guidance, and they're basically going to formalize that guidance for the pandemic period. So they're going to have, these were temporary rules. We're now making them semi-permanent, and we're going to reevaluate them on a monthly basis. My guess is that banks need to take that same kind of step. They need to look at, what is their guidance, reevaluate every 30 days on this is what we're going to do. And we frankly don't know where we're going to be 6 months from now, whether that vaccine is going to be effective or what our current state of work from home will be or won't be, quite honestly.
Well, we can only hope for the best as far as the vaccine and maybe getting out of the house one of these days, right? But you mentioned a couple of things that I'd like to unpack a little bit there. And the first is you got into a more of a technical discussion around, some controls like VPN and things. And so I hope that we can have a much broader discussion of those types of controls and more of that technical issue on the call, on the webinar next week. And hopefully I think that will add a lot of value to our IT folks that might be struggling with or contemplating different types of controls that they want to add. So I think there's a lot of great value that we're going to bring there. And then secondly, you mentioned vendors, right? So we like to think about, obviously we've got some downstream risks to our, to our vendors. And again, when we pushed into digital channels, we started relying more on vendors. And then you mentioned in your comments about, reviewing things more frequently, reviewing those controls more frequently. And so when I think about that, and I think about the vendor space that we're in, where we're kind of really relying on these vendors, many of which may be cloud vendors, a lot of which have access to PII, right? Non-public personal data. Does that vendor monitoring, that static vendor monitoring program that most of us have, right? Look at vendor once a year, put it on the shelf, wait for our examiners to ask for it. Is that sufficient nowadays in this environment with the reliance on vendors and with the risk of those those vendor risks? Or do we need to get transitioned to more of a dynamic program? And if so, how do we do that?
That is the $100 million question there. And the question is, do you stop at third-party vendors or do you go to the fourth party? Who are your vendors? And what is the information that they're sharing, and how is that information exposed? There really is no necessarily good answer for that. What was really interesting was the FDIC put out an RFI last month that asked about the potential to have third-party certification of vendors. So that third-party risk management certified, third-party risk management, and a third party certified the due diligence aspect of it. Interesting, the FDIC recognized the challenge, the exact challenge you said, having every bank, certify or due diligence and every vendor. There's got to be a way to be more comprehensive or collaborative on this, so that we're not all doing the same answer and we're not only updating once a year. I think everyone can agree once a year probably isn't sufficient, because changes are made. They change their vendors, tracking that, but not every bank can do that level of due diligence. So I think there is some hope on the horizon. I think the regulators have even recognized that challenge, and people are looking at ways that they can better manage that. We know there's commercial companies out there that allow you to share due diligence reports of different vendors. Some focus on big banks, some focus on small banks, and then we've got the FDIC RFI. So I think there's hope out there that we can move beyond that once a year and really reduce the burden on banks. So get better oversight, but less burden for banks, sharing this information, sharing this due diligence approach.
Yeah, excellent response. And I think, to me, there's a difference between what's regulatorily required and what's good for your business. And I think, kind of a new risk management term that we've been kicking around for the last couple of years is speed of onset, right? So it's how quickly that risk hits you. And in this year of 2020, we could talk a lot about how things are coming at you quick, and the reason that, the value that dynamic program might add. So we have a few more minutes, and I wanted to just get your opinion on kind of the bank's response to COVID in general. We know that, all of our banks several years ago, we put in place that response to the avian flu, right? We had this pandemic flu plan that we kind of stuck at the back of our BCP and went, okay, that's good. Everyone's happy. Let's move on. But did in your estimation, did any banks actually use that, or was there any type of uniform response based on something that we were doing in the regulatory environment, or was it really just kind of piecemeal, depending on the risk factors of each institution?
So I think it was a mix. I think banks had their business continuity plan in place, and they relied on that to allow them to execute work from home procedures and others. So that was a positive. I think the pandemic plans, people thought about pandemic, but no one expected, in early March, the dominoes that fell in terms of the closures that occurred. I mean, the speed, it was just amazing from our perspective. I'm in charge of the coronavirus response at ABA, and we were looking at doing a work from home test because we wanted to, be prepared in case things closed. This was in early March, and we were going to do it at the end of March. And I said, you know what, maybe we should push this up to, how about Friday the 13th? Let's do it on March 13th. We'll do a work from home test. And I was like, it's too, we ended up doing it. And then we ended up closing ABA and haven't been back since that Friday the 13th because all the schools closed, everything shut down. And so I think that speed really hit people up, and there was a lot of scramble. I think the other big issue that we ran into wasn't necessarily even just from bank side; it was from the government side. Remember when they're closing everything down, and then states said only emergency essential employees can leave their houses and go to work. Well, it was obvious that was doctors, nurses, firemen, grocery workers. In a lot of states, it didn't include banks, didn't include those at the customer service centers, and we had to work very hard with DHS to update that emergency essential employee so that banks could actually not have issues when they actually went and did their jobs. So I think it was a mix. I think banks were probably better positioned from an IT perspective than maybe a lot of other industries, but there were still just operational aspects that were just really challenging. That frankly, they call it the novel coronavirus for a reason, because it was novel and no one had ever gone through this before.
Yeah, interesting that there's a bit of a schism between how well prepared we were on the IT side and a little bit of lacking on the ops side. And also, if you're superstitious, maybe it was a little bit ominous that you did your test on Friday the 13th. Yeah. So we've got a few minutes left. I just had one follow-up question for you. I'm a big proponent of continuous improvement, whether that's personal life, professional life, in your program or whatever the case may be. And I'm also a proponent of, especially in our industry, using data that we have to drive that continuous improvement. So, have you talked to banks that are conducting, mid-pandemic assessments? I dare to say post-pandemic, because obviously we're still in it, but have banks looked at, taken an objective look at their response to the pandemic and kind of looked at what went right, what went wrong, and then maybe started to look at any gaps in their implementation and maybe started to reposition their BCP in light of that data?
To be honest, Paul, I haven't. I think it's just been, 2020 has been, I don't know if you've seen the meme of the flooding with the dumpster floating down that's on fire. I think that really symbolizes 2020. We had not just the pandemic, but then we had a lot of the social unrest that occurred in many cities. We've got a presidential election. We've got protests all over the place. So I think people, frankly, are, and now, this late in mid-October, we're having 73,000 cases in one day. We're hitting almost our peak of what we saw in July. So I think, people are just, they're trying, I think they're evaluating what their strategies are, and they're reevaluating whether those are long-term or short-term and what they can keep. But I frankly haven't heard of another bank that's actually done a full step back AAR, because I think a lot of them are just still stuck in that, response mode.
Well, yeah, and that's an excellent point. And I really didn't, we didn't think about that this is still going on, and that the issues are rising daily. But again, that's my hope, is that eventually, when we have time to breathe, that this pandemic and our response to it has provided us with some actionable data, and I hope that banks will take advantage of that at some point and do that assessment and make their programs better, right? Because we don't want to be in this situation again if we can present it, right?
Well, it's interesting. I just had a call today with a banker. They're based in Texas in Lubbock. They're reclosing all their branches. And so, I think they're by nature, they're having to do that AR of how that worked last time and how can they make it better this time as they reclose. It's unfortunate, but that rise in cases, and they're not the only one we've heard from that's reclosing. So I think it's, I hope people listen to Dr. Fauci, and I hope that we can get control of this, and please social distance, wear your masks, and don't bring out-of-state people to Thanksgiving. I'm really worried about us over Thanksgiving, because if we all mix at the level of coronavirus transmission we've got, it could be a really bad December.
Yeah, we don't need turkey that badly, right?
That's right.
Well, Paul, I appreciate your time. We're going to be out of time for the podcast, but again, I hope we can see everybody again on our Cyber Risk Management in 2020, What You Need to Know webinar, which will be airing next week on aba.com. And I can't wait to get with you again and discuss kind of in a deeper detail some of the issues that we have in front of us. So thanks again, Paul. Really appreciate it.
No, thank you, Paul. And for any of our listeners out there that want to laugh, go to banksneverasked.com and hopefully learn something about phishing. And I appreciate the opportunity to talk with you today.
Thanks, Paul and Paul, and thanks everyone for listening to this episode. If you liked what you heard, please hit the subscribe button on your favorite podcasting platform and leave us a review and tell us how we're doing, or if there's any topics that you'd like for us to cover in the future. And if you'd like to get more information on cybersecurity, there's a ton of great resources for you waiting on our blog and on our resource center at Ncontracts.com. Thanks everyone, and we'll see you next time.